Hello traders, Nick Shaheen here looking at GE General Electric. A lot of people I hear in the media, they're experts at it. I am definitely not an expert at it, and I challenge them on saying that they're experts. I don't think management even knows what the hell's going on. Anyway, so this is definitely not a recommendation to buy it or sell it. This is my opinion as to what levels matter. And this is a daily chart for 1 year. But before I forget, at the end, there'll be a subscribe to this YouTube channel pop up on the left-hand side, I think. Hit that and click the flag to alert you, to send alerts whenever somebody posts. It's free, so take advantage of it. So back to G. Somebody wrote it up today, so it's positive 3-4%. Is it time to chase it? To me, it all depends on the timing. If I'm in it for the long run, I've said it since it was in the lows, buy it and just forget about it. Don't even check it, because that's a speculative trade. If they're right, they're right. If not, then you risk the money and you lost. In this case, there are some lines that are important. So this is a daily chart. It usually gives us a big picture versus more minute data. So if I go to a 2-hour chart, I can have clues that I don't see in the longer term. And this is a 30-minute chart. I can see clues. So I'm going to start here. So every candle here it's 30 minutes. So you can see how it popped up and it's holding. But is this a place I'd go long? No, not at this time frame, because at this time frame there's a ledge that's at 1190-ish, give or take a few pennies. That was, that happened a few days ago. So now onus on the bulls that they get back to it. Once they got back to it, that they take it out. Usually when prices come back to a ledge, a accident scene, they don't just blow through it without good reason. So they tend to fail, take another stab at it, maybe fail again, and then go above it. And then establish it as footing. And this happens on any time frame, but I'm starting micro and then walking back. You can see that this was a ledge right here that they fell through and then gapped up to. So now they leave a little gap down here. Not every gap gets filled, but a lot of them do. There's another gap here, and there's another one I'll show you later. So I don't chase long. First of all, it's up 4%. Yes, it could rally to 12. It was just at 1220 not too long ago, which, by the way, I noted the breakout then. But in this case, onus is on the buyers to show me. I'm not going to say bulls and bears, because bulls and bears buy and sell. So onus is on the buyers to take out the. So if I were to put a trigger, I'd do it no lower than 1198 to be exact, because this was the highest fail in that zone, or even 1202. So 12-ish is maybe okay, let's get to it. But then I asked the same question at 1224. So for my time frame, I set an alert at 1224-ish, because then I can see it go to 13 or higher, because that was a major turnaround point. Now, looking at the volume profile for this period of time, what does that mean? It's how volumes, where the buying and selling happened for this period of time. We are at the upper end of the busiest area. So it's called the value area from the volume profile. And if you bunch it up, the bulk of it, this is the high end of the bulk of it. Doesn't mean that they can't go above it, but usually it's somewhat resistive if you're below it. And it's supportive if you're at it. So in this case, believe it or not, the busiest point was the base, which was 11. Right here, this zone was the busiest buying and selling for this period of time. What is this? This is December 17th through now. When is now? 123. So a couple months. So it is important to note that this is a good base, but it's not crazy to revisit the base. We are at the upper end of the range. So this is just a kind of like a big picture at a smaller time frame. These are the same lines. Those are the 3 green lines you saw before. Before I do that here, those are them right there. I had drawn them. I drew them a while back on the way up, so I left them because I could refer to them visually. And I drew them because they were a zone that I was interested in. The middle line was kind of like to capture this zone here and this zone here. So I can see right from this one, without going any further, that this is not a place to start buying unless they prove they can go above it. But if they go above it, the upside is big, really big, because look at the accident that happened here. I think I'm going to have to go to 1 week. Okay, so this is 5 years. Let me reset. This is 5 years worth of data. Okay, you can see terrible time. I'm going to zoom in a little bit to eliminate some of the higher areas. Okay, so we can make sense of this chart. So this is, every candle is 1 week. It's Thursday, so this candle is still in progress. You can see how the prior candles were a lot higher. So why should I chase it now? Oh, this is perfect. This is really perfect. Okay, so I'm going to bring a scratch pad. Oh, this is intraday NASDAQ. We had a good rebound today, but back to a place where I expect some resistance. Anyway, that was a intraday comment in the chat room, which, by the way, link is down below. Free access to the chat room for now. Okay, so this top area here is this ledge right here, right? That's why I put that orange line. I don't want to buy it as an investment or as a swing trade for a few months without proof that it can go above it. Just like I don't want to short it until it loses this line or that line. And even then it's a calculated short because, yeah, there's a gap down here somewhere. I'll check it out on the daily, but we have a higher low. I don't mind seeing it coming down to like 10-ish. It wouldn't change the overall weekly progression of higher lows attacking a neckline. What neckline? This one. So let's say this guy does this and they fail again. I know they announce earnings next week, so that makes it somewhat binary. But this would be the normal progression where they attack the same neckline, prior accident scene, over and over until they take it out. And then the upside would be somewhere like this area here. If you want to look at it, some sort of a rounding bottom, cup and handle, whatever you want to call it, it's the neckline that gets taken out, and usually they overshoot above because the sellers are tired, and that's why the buyers overcame them. And this would be a stopping point too, so kind of a couple of targets. So you see how the point of this marking up is X. I don't want to chase it without proving to me that they can take out the prior ledge. There'll be resistance again at 1330, but there's nice upside. I don't want to start negative once I buy a stock or once I bet upside on the stock. I hate it when you get into it and then it fizzles. So timing is never perfect. I'm not looking for an absolutely perfect time, but I don't want to get faked out. Some stocks fake you out for a long time. A long time. I can remember Square, for example, FedEx. How many people wrote that down? Another one, biotech. Gosh. Anyway, also same thing. Lower highs, lower lows. Okay, it's going to break out. This wedge is going to break out, and it never does. So in this case, they're attacking a neckline. Back to the daily. There is a gap down here. What is that? 950. So I said I'd like to hold 10 and change. Let's say I want to hold this level right there. Otherwise, this gap is going to fill. Come into play. How about that? So I have a trigger here for short-term traders because that would be an inverse cup and handle that would bring this one. And if this is lost, or I should say 10.75 is lost, then we'll have a conversation about 10 or 950. So here's the progression. On the upside, I'd love to see a breakout short-term of 12 and then next 1220 and change. That would be the better trigger. On the downside, I'd love to see a hold of 1150 and definitely 1130 and change, and definitely 1090 or at worst 1070 something. So these are the numbers that matter in my opinion for this chart. I don't care what company this is. I would have said the same thing. I don't know anything about GE anymore. I know they're in the process of cleaning up a big mess. I know this CEO is supposed to be the one that actually turns it around. Maybe he does, maybe he doesn't. But everything he's doing now, the team is doing now, is to streamline the company. So they probably got all the bugs out, so to speak, the major bugs. I know they sold some stuff and they are streamlining. Does it still pay dividend? Look at all the alerts today. Does it still pay a dividend? I don't know. They sell it less than 1 time their sales, so that's pretty good. PE, it shows 400, so that tells me it's a skosh high. I'm not sure how accurate that is. Maybe they're because they're in transition. It's still a huge market cap company, and it's worth a look. I mean, it's not going to zero. Price to book is a little expensive, 3.5. So don't know what's under the hood. This is just the easy picture. Jet engines, whatever, they are. It's a chart, and the chart has clues. So I don't get hopeful on a swing trade, say a couple of months before this line at 13 and change. I don't get too bearish unless they lose the whatever that number, 1075 and change. So these are my thoughts on the chart, and nothing in here again was a recommendation to buy it and sell it. These are the levels that I think will matter regardless of the headline.